Well, good evening, folks. It's Sunday afternoon, so I thought I'd do a quick video for members, but I'll put this up on the public YouTube channel as well so that everyone can get a grasp of what's going on. Let's have a look at the currency pairs. First of all, dollar yen is the one that's on everyone's mind. I'm hoping for a top over here. Now, we're in a hedge position right now, so I don't know where the turning point will be. But basically, I think the dollar has got some legs in it, and we're going to see some dollar strength creeping in over the next week or two, or 4 or 5. The dollar yen's kind of interesting because we reached the top of this channel, so way beyond the 155 sort of line in the sand that everyone was speculating, with a big push up through there. We've reached the top of this channel. It's quite a clean and decent channel, but quite often, and we've seen it recently, prices are breaking through the tops of channels and then coming back in and basically trapping the longs on the top side. So perhaps we'll see that, a bit of a push through. 160 is not far from us, and we'll have to see how we go. Unless you have a relatively small position on dollar yen or you're hedged, I'll be very, very careful of this, and I wouldn't be surprised if we saw 160 touched and maybe even a push through there. So if we don't reject the top of this channel in a few hours' time when the Asian markets open, then we should see a push up a little bit higher. If we gap down or have a big spike up and a move down, maybe through the top and then back down again, we should see a pullback to at least this order block down here, and that's at around about the 148 level, and then the bottom of the channel, of course, which is down here at about 145, but rapidly rising. We've also got all the moving averages, that's the 20, 50, 100, and 200. And so those may provide some support if we break down a little bit further. So right now, one needs to be super cautious, allowing for a spike up to 160 and maybe even 162, 163. I think, however, after this big move up, we're going to need a bit of a pause and a pullback. And let's see if we can get something down to at least about the 155 level, the original sort of breakout point down here and the line in the sand that the BOJ were talking about. They have not raised interest rates again. They're talking about potential interest rate increases later on in the year, but as always, they've been very slow to act. So given that we've seen yen weakness again, not only against the dollar over there, but also against the euro yen, that's forcing a bit of dollar strength and therefore euro and pound weakness. I'm not trading the euro and the pound at the moment. I've not been trading those for quite a long time. And this is a little bit unusual for me because I'm often in the euro and the pound, but not recently. So from my perspective, the euro and the pound, I'm just going to leave alone. And dollar yen, I'm going to play this very, very carefully, touching the top of that channel. Let's see what happens tonight when the markets open. Right, going across to NASDAQ and S&P. Friday we had very little movement. We're still hedged on NASDAQ. We're not in S&P. And we're short NVIDIA, but long Apple and Tesla. It's a fairly complicated hedge situation. For those of you following other traders on YouTube or perhaps Wall Street Journal or Bloomberg or anything like that, where people are saying they know which way this market's going to go next, I'd be very, very careful. Don't put all your eggs in one basket. And if you are trading stocks, I'll be very wary at the moment. We've got large-scale war in 2 parts of the world. We've got various financial problems going on in different countries. And we've also got the interest rate deliberations by all the central banks in the world. And it's going to be a matter of, I suppose, chicken, really, in a sense. Who's going to cut first or who's going to raise first? I hope it doesn't get to that. But so all a bit mixed up right now. We haven't seen any clear direction from most of the central banks, including the Fed. And because interest rates and economic numbers are so important for these markets, I think we're going to have to wait to see how all these pan out and also how these central banks begin to reduce or raise interest rates. So those are our positions. Short on NASDAQ. We did take profit from the top on the move down. We were short on NVIDIA, but now hedged, but we've locked in some profit on that. And then Apple and Tesla we long and nothing on AMD and SPX. Right now, across to Bitcoin and gold. Well, we're long on both of these, and they're holding up pretty well. Gold on the 4-hour chart is above its 20-period moving average. It's also above the 20-period moving average on the day chart, so those are very, very positive signs. Bitcoin got a bit of a wiggle on over the weekend and trying to just push up, but just falling down a little bit today. And we're below the 20 and the 50-period moving averages on the day chart. My thesis is, and it's pretty simple, there's a thunderstorm starting right now, is that as long as we're above about 58 to 59,000, this sort of double bottom here with a tweezer bottom and this previous swing low, as long as we're holding above there and we've retraced about 50% of the move up from the bottom so far, we should be okay. My targets for Bitcoin are new all-time highs, but if we break down below 58,000, I think we might have to see a bit more of a pullback, perhaps even as low as 50,000 or slightly below that. So anyway, so far so good. We're long on both gold and Bitcoin, and we'll see how those go, but I think those are looking quite constructive so far. And then going across to some of the energy commodities and cocoa, we've got URA and UEC, again, just pretty much sideways. We're long on those. Let me switch URA to the day chart. And that's just popping up a wee bit, still under the 20-day moving average, as is UEC, still under the 20-day moving average, but we bought some more at the bottom on Friday Overall, I think uranium products are going to be a long, slow grind upward, but generally I think the movement's going to be upwards as the demand for uranium continues to grow. Natural gas, really just faffing around. These are the day charts. We rolled over on Friday on the Henry Hub. Now, basically, I'm long on natural gas. I've got the Oanda ETF on this chart, which I'm long on, and the front month futures contract over here at Black Bull Brokers. I think I'll cover natural gas on a separate video, so watch out for that. I'll upload that in about an hour from now. Now, cocoa, I covered in the previous videos. We've got 3 lines of attack. I'm going to cover this very briefly, but nothing's really changed. There's our shallow line of attack, the intermediate one there. These are these trend lines, and then the very steep one. The scale on this chart is a regular scale, and just look at that. It's absolutely phenomenal. Literally a vertical move. You don't see that very often. If I change it to a logarithmic scale, it doesn't look much better. And the log scale is actually meant to smooth out those dramatic and extreme moves and moves to really, really high numbers. But it hasn't even managed to do that on this chart. So incredibly overbought. Let's switch this back to regular and have a look more closely at what's going on. So this is the day chart on cocoa. And there's that hanging man, which I said could be the reversal candle, the top of this move. And so far it's proven to be so. As long as we close beneath that hanging man on a daily close basis, we are now looking to short cocoa. Bear in mind, we've got the 20-period moving average below us. We need to see 2 daily closes beneath that to confirm a downward trend. The next target's the 50-period moving average, and that's about 8,400, and then the bottom of this channel, which will move up probably to catch the 50. So somewhere around about 8,200 to 8,400 is the first target for cocoa, but we have to break down through this swing low, and we have to close twice beneath the 20-period moving average. Until then, this downward move is not yet confirmed and not on its way, so be very wary about shorts still on cocoa. And WTI, well, we're short on this, and so far so good. I'm trying to get another short position there at that circle at the top of this trend line, but we didn't quite get there. We almost got there on Friday, but just pulled back a bit. We're already short from 83.50 or 83.70, somewhere around there, and I was hoping to add at about 84.20. We didn't get there on Friday. Perhaps we'll get a chance this coming week, but if not, we'll continue to move lower down towards the bottom of the channel. Once we get there, we may follow a path something like this. This is just an idea. It's a roughly plotted out path, and these are just for ideas. They're not predictions, or I'm not saying that we're going to follow this path at all. But if we did follow that path, I'd be kind of pleased because it fits my idea on WTI and where we're headed. I think we could get down to about $60 on WTI in the coming days, weeks, and months lie ahead. And that's it, folks. Bitcoin is busy ticking away because it's the weekend and it's a 24/7 market. Just moving slightly down on the 4-hour, but we're in this order block. And if I just pop a Fibonacci retracement on here, you can see that we've pulled back to exactly 61.8% on the Fibonacci. Kind of a double bottom here on the 4-hour, 2 spike lows, and just trying to move up right now. We've got all this traffic above us, all these moving averages. But if we're going to hold this level down here about 59,000, 58,000, at some point we'll push up through these moving averages. There's the 200 pretty quickly and pretty dramatically. Well, I hope you enjoyed that, folks. And if you did, a thumbs up would be much appreciated, and consider subscribing to the channel. And I'll see you in the next video. I'll be putting a natural gas video up shortly.